I think now is a good time to start. So good afternoon, everyone, and welcome to AMGC Connect's webinar, Getting the Finance to Go Global. Today, we're joined by the team from Export Finance Australia, and we'll be hearing from Christopher Gianotti and Emily Carter from the Small Business Lending team. But before I hand over to them, I'll just give you a quick rundown about the background of AMGC. So AMGC is the peak body representing Australian manufacturing. We provide services and solutions on all things manufacturing to both industry and government. AMGC's network represents about 220,000 employees across the country with a network of 12,000 and a membership base of 4,400 companies. AMGC's experience includes co-investment and management of government funds, providing support to manufacturers, hosting networking events, and most recently, our AMGC Connect service offering under the Industry Growth Program, which you are all members of and how you are joining us today. So I'll just explain a little bit more about the AMGC Connect offering under the Industry Growth Program. It can be mainly broken down into three key areas. Our one-to-one services are where you engage directly with someone from our team and receive advice tailored to you and your business, usually solving a direct problem you are facing in your business. We then have our one-to-few offerings where we are doing things like best practice tours, showcasing other manufacturers in our network, and hosting small leadership roundtables. And then we have our one-to-many offerings, which are things like our webinar series and other self-led learning opportunities. So today's webinar is an offering under the one-to-many category. And today we're joined by the Small Business Lending team at Export Finance Australia, and we'll be hearing from Christopher and Emily. Export Finance Australia supports businesses with finance solutions for export trade, overseas investment, and overseas infrastructure development that has a direct Australian benefit. Export Finance Australia's mission is to help small, medium, and large Australian businesses grow and succeed on the global stage. So before I pass over to the team, just a reminder that if you do have any questions, there will be time at the end of the presentation to go through them. So please ask all your questions in the Q&A box and we will answer them at the end once Chris and Emily finish. So I think that's enough from me. So now I'll pass over to the team at Export Finance Australia and let's learn how they can help your business. So over to you, Chris.
Thank you, Amelia. And look, team, very happy to be here today. We've been really excited about this one and working with our great friends there at AMGC and collaborating further. So as we go through the session today, just building on Amelia's point, we love questions. The harder the better. Emily will take all the hard ones, of course. But look, just put your questions in the in the box. We'll circle back and cover all of those before we at the end of the session. I'm just bringing up my presentation now, team. So hopefully you can all see that. Can I just get a quick show of hands? Everyone can see the session, see the presentation? Great, thank you. So team, as Amelia touched on, we're Export Finance Australia. We're the government's export finance agency, but I'll probably sort of make a clear delineation here between us and government. We are not the government as such. We're the government's export finance agency, which means we're a special investment vehicle. We're 100% owned by the Australian government, but we operate in the market in a commercial way. So what that means is we're not a lender of last resort, we're not a grant funder, but we do have funding available for businesses that are expanding and wanting to either go overseas because they're not currently overseas or are currently selling overseas and would like to increase the scale of their operations and need funding in order to do that. The breadth of things that we finance is very broad. And I've just shared here on screen a bit of an example there in that kind of manufacturing realm, the advanced manufacturing machinery, advanced products. You might be dealing with something in the defence export supply chain, precision components, and so on. obviously all critical part of the manufacturing economy. But of course, we also do we can also finance the other side of the ledger there. If it's food production, chemicals, we do see a reasonable number of companies that are selling chemical products overseas, and even down into the sort of textiles, leather goods, retail type of products as well. So the range of industries we support under that wider umbrella of manufacturing is very broad. I know we've got a lot of advanced manufacturers here today on the call, and obviously that's the theme of AMGC. But when you think of Export Finance Australia, the range of what we can do is something that is a very broad segment of economy. Manufacturing is one part of that, but agri sector, we do a lot in the minerals side of the economy, services, and deep into agri, a number of the sectors there as well. So when you think Export Finance Australia, think broad. And one thing that we do love is hearing from exporters and potential exporters about what are their goals, what do they want to do. You don't need to have an immediate finance solution to reach out to us and connect with us. And it's important also to understand that the type of customer, as well as industry that we deal with, is diverse, but also the way the export is constituted is very diverse. And I'm going to share some examples in a moment, but what I'd be really keen to hear from the audience today is, could I get it just a show of hands? How many of you are currently exporting or directly selling a product or a good overseas? Got a few hands? Okay. Okay, very good. And team, the other one, I'd love it just as we're going through, if you popped into the chat, just what some of the products are that you are exporting. Are you doing some kind of finely tuned, high precision component? Is it generators, or what are you actually manufacturing? I'd love to just get a few comments in the chat there to give us a bit of an idea. But what's really important is that when you think about exporting and how Export Finance Australia can assist you, there's a number of different things that constitute an export. Now, the first one I'll touch on is a direct export. So direct export, that is, you've made a specific product to go offshore. I'll give you an example. There's one customer that we're working with at the moment. They do fire protection and flame retardant chemicals. These are in a canister, and this canister is actually made and produced in the UK. All the IP is owned here in Australia. Other than the contract resource to the UK, all the employment is here in Australia. Now, the reason I'm sharing this example is because you may think, hang on, that's not an Australian export. This is an Australian company, but all the manufacturing's done overseas. Well, believe it or not, in our terminology, it does constitute an Australian export. So what I'd say is that any of the manufacturers on the call, if you're making the product locally here in Australia, or if you own IP, and the profits and the employment as a result of that IP is flowing, the profits particularly flowing back to Australia, even if your manufacturing is happening overseas, that may constitute an export. So that's something that a lot of people go, oh, hang on, we wouldn't have thought that. We didn't realise that would qualify, but it does. The other piece that we can assist with, and when we think about exporters, is the type of funding that's available. Now, quite often when you think of funding and exporting, we sort of jump straight into, oh, it's got to be a loan. Well, it doesn't. The type of products that we do are more than just loans. But I'm going to touch on the loan side just for now, and I'll share the other examples I've got in a moment. But if you're working with your bank and you're finding that you're attempting to grow, scale up, particularly businesses, if just for example, you might be a business that's turning over 2 mil or 5 mil or 10 mil, and you're trying to get to your next step up, and that might mean that you're picking up a much larger contract and you're really stretching. What can happen with the banks, and it varies by lender, of course, but the banks may have some limitations on the security that they're willing to lend against. It's what equipment have you got in the factory, commercial premises, resi premises, and there can be what we call security constraints. Now, the advantage with Export Finance Australia is that we operate with a lot of what we call stretch. Now, stretch is where there might be no security available, or the bank's got all the security, but you as a manufacturer wanting to sell overseas need a little bit more funding, and it's going to be a bit of a stretch and it will be unsecured, that's something that you can open a conversation with us about. The other element or areas where the banks might struggle to support you is things like sector or country. Sector, a real obvious one and something that's becoming really important at the moment would be defence. And I know within the manufacturing supply chain, the way Australia is set up, supporting what we call the defence prime, so the big defence companies, there is a lot of smaller manufacturers in that defence supply chain. And the banks may not lend because of that, particularly if there's what we call an offensive weapon component or sharps. Banks don't like things that go boom, for sure. But with us being a government agency, that's something that we can consider. So if you're somewhere in the defence export supply chain or you're selling to the ADF and the bank has said no, think about a discussion with us. The last item I'll touch on there, the scale up element, really important one because it also kind of plays back to that point around the security constraints. When you're trying to grow, you don't necessarily have all the security that the bank will want, and you're trying to scale up and really grow the business. There is a lot of lenders out there in what we call the non-bank segment. You've probably come across some of the names. I won't go into them specifically, but the interest rates that these lenders will charge can be quite difficult for businesses that are growing. The interest rates can be quite aggressive. With Export Finance Australia, we charge an interest rate that's a little bit above the main banks, but it's less than that non-bank sector. So one to think about is our position is not to compete directly with the majors, but it's to support really good businesses who need a bit of extra capital and a bit of extra money to grow, but should not be charged exorbitant interest rates. So that's one to consider in that scale up phase. And look, I know it's difficult when we see a lot of businesses when they're scaling up. There's a lot of demand on the money. You're trying to get extra input costs for, you might be paying out a lot of the account, but not being paid yourself yet. And it can be quite a challenging time when you're trying to grow. So think about ourselves here at Export Finance in those situations. In terms of the products and the way that we support businesses, I've mentioned the loans. Look, loans are certainly a critical one. The other product that we are supporting businesses with is what we call a bond, or you may have heard of it as a bank guarantee. We may be wondering what does that mean? I'll give you an example here. This is a lend that we did recently. This customer was producing marine buoys, and these marine buoys had various forms of technology to actually drive maritime drones from, and this was being sold to a country in Southeast Asia. Now, in order to fulfill this contract, the manufacturer needed to provide effectively a bank guarantee to the buyer. In this case, it was overseas government, and the guarantee was for an advance payment. So effectively, in order for the manufacturer to get paid, they had to effectively guarantee a sum of that payment amount to the offshore buyer. Now, that was going to be quite difficult because the guarantee amount that they had to put up was around 100,000. If the exporter went to a bank in this case, the bank would want that to be fully secured. The exporter would either need cash in account or they'd need property security to cover that guarantee. Whereas with Export Finance Australia, we're able to support that business by requiring no cash cover. So the customer could provide the advance payment guarantee to their offshore buyer and retain all the capital and cash in their account because we did not require them to put any of that cash aside as security. So if you find that if you've ever come across one of these or you've had a guarantee requirement, again, that's something for us to think about. But look, I do love a show of hands, but has anyone come across those sort of requirements recently or somewhere throughout their sales journey? Right, one or two? Okay, very, very good. All right, team, well, that gives a bit of a high-level overview. There's more that we'll cover, and we'll dive into a few more examples. But before we do so, I'm just going to bring up our small business loan. And Emily, who works with me in the team, is going to run through some of the specifics of this product. And I'd probably just say, we talk about the small business loan today. The levels of funding that we can do are very broad. If you're a small business or a large business, the limits and so on change. So if you're on the call today thinking, hang on, I'm medium or I'm a larger manufacturer, that's okay. We'll have solutions for you. We just won't go into all the detail today. But Emily, can you run us through the small business loan?
Definitely. I hope everyone can hear me okay. I'm kind of talking through Chris's computer, so let me know if you can't hear me at all. But yeah, so our small business export loan is our key product here in small business export finance. It's a really, really cool product. It actually enables our customers to, take that next step in their business and, help them get overseas or fill that funding gap that they need funding for. So generally, what we see people come to us looking for the small business export loan is if they have a purchase order where they need assistance funding that purchase order, if they need some general working capital. For example, they might have a bit of a gap in their payment cycle where they really need a bit of extra working capital to help them produce their product and get them moving to the next stage. Or we also see a lot of export market development, which is a really cool thing that we do. It's where, for example, an existing Australian business might have a relationship with a UK business, and that's where they're selling their existing product to, but maybe they're really keen on developing those markets and are looking to move into the US. So that's where we can actually come in, help out and provide them some funds, which they could use for attending trade shows, maybe some shipping costs, some legal costs, relabeling their product to fit in the new market. Basically anything under that bracket of developing the new export market, that's where we can really help out. We also can do equipment finance under this loan as well. So that's another unique thing to keep in the back of your mind. So for the loan, there is a few specific minimum criteria. So we need a minimum turnover of 250K, 2 years of trading history required, and a loan amount needs to be between 20 grand and 350,000. So with this loan, it is unsecured, as Chris did touch on earlier in the webinar. All we will take is a director's guarantee. We don't need any spousal guarantees or property security. In a very rare circumstance, we may take a GSA over the company. But in our assessment process, we do take all overseas income, which is something a lot of banks don't do. And, we have this product which actually, can be used for finance in a lot of different ways that a lot of banks won't actually help you out with. So rather than getting into the nitty-gritty of doing too much of the little things on the product, I'll pass back to Chris to move on to the next step.
Great, thank you, Emily. Just one final point there, team, is with that security position as well. If you're dealing with the non-bank lenders, they'll quite often ask for what we call a spousal guarantee or something from the business owner's partner. And they also may take caveats over your residential property. Just want to underline, Export Finance Australia, we do not do that. That's not a requirement. So when we say unsecured, we truly are unsecured, except for that director's guarantee. The next couple of sections, look, I'm just going to share a few things on cash flow and the gaps that we see. And I know there'll be a lot of diverse businesses in different situations on the call today. So hopefully there is some value in these next couple of slides. But the other one, team, is please do keep asking questions, particularly about our finance and our products. If you keep putting those questions through, and we'll circle back at the end. So one of the things that we often see manufacturers have a challenging time with is gaps in cash flow. And the gap in the cash flow is typically because the manufacturer has input costs to make their product, but it might be a long time until they're paid. And this can create quite long durations when the amount of cash coming into the business is limited, but there's still obviously a viable business there. It's just a matter that they need to get paid. One of the ways that we can help with that is because we will fund on the purchase order. So if you've got a purchase order from that offshore buyer, we can look at funding at that stage. Depending on the lender, they may require an invoice. Of course, invoicing, you might be invoicing for part of the order, or you might not be invoicing or collecting you obviously won't be collecting the bulk amount of it until the order's been shipped or the buyer's received it. But probably the key point is we will look at supporting you when there is a purchase order only. You don't actually need to have the invoice. So you can think about that of getting some funding in a bit earlier when you know there's intents or that there's demand coming up. So for example, if you're a manufacturer and you have seasonal fluctuations in demand, it might be that you see spring as a critical selling time or European summer is a critical selling time, whatever it might be. Quite often these manufacturers need to start ramping up production and they haven't got the invoices yet. Can be hard to get finance. So think about us during that situation. And we touched on this a little bit earlier, but scaling up that production capacity, sometimes that's for a one-off order. Sometimes it's because you're transforming the business and you're anticipating strong growth ongoing, and there'll be continued demand to keep building production, might need more equipment, your input cost, you're carrying more stock and inventory, or you've got more stock that needs to go into the manufacture of those products. So again, worthwhile having a discussion here with Export Finance Australia. And the final point on this slide is that the delivery cycles, look, we see all sorts, like the sort of customer who we see might be 180 days from the moment they start their production until they're paid. And particularly if goods have got to go on water, and depending on your payment terms, you might be getting fully paid when those goods are at the dock ready to leave, or air freight, or you might not be paid until they're fully received by the buyer. And particularly we've seen this, some of the manufacturers where it's an Aussie business, the manufacturing, the product's actually being manufactured in China, and by the time they get paid, because the product's gone to the States, and I know that's not the perfect example right now, but we've seen these businesses with 180 days before they've been fully repaid, and it does make it very difficult. And during those steps, the business, you as the business owner, you're really carrying the risk, right? Because you've got buyer on one side that you want to support, and you've got a supplier behind you who you need product, inputs from, be it your metals, your chemicals, whatever it might be. And there's a risk in this journey. And that's why we say with Export Finance Australia, we're a lot more open to looking at these journeys where there's a purchase order. It doesn't have to have that full invoice. But if I give you an example there, if you've got essential components or essential minerals or materials that need to come in and these are being delayed, that's your supplier risk. And then the performance risk, of course, that's you delivering it. That's the bit that you control. And then once you've completed your manufacture, you've then got the buyer risk. Am I going to get paid? Am I going to get paid on time? Is the invoice going to be late? So again, depending on your payment terms, I'd like to say every business gets paid, up front and on time. We know it just doesn't always happen that way, but you're carrying a lot of that risk, and you sort of need a finance partner that's willing to work with you on that journey. And when it comes to exporting, that's a market that we know very well. So probably should say, we're not the lender of last resort. We can't help in every situation, but we'll certainly be open to a discussion with any manufacturer who's got either a short or a long cash conversion cycle from when you start to manufacture your product or get your inputs in to the moment that you get paid. The next couple of slides, in fact 3 slides, we've got 3 customer stories which we're going to share with you, and then we'll pause and stop for that Q&A section. So by all means, keep putting in the questions that you've got, and we'll jump into the first one of our stories now. So this was an interesting one because this manufacturer is a chemical product manufacturer and selling concrete hardening solutions into a number of countries around the world, particularly into UAE. Look, had a great relationship with their main bank, which in this case had supported them with trade finance facilities, but the exporter had sort of reached the caps that the bank was willing to continue to support them on. And this exporter, every 12 months, we would see a request for finance from this business. And this is a great example of Export Finance Australia supporting a customer who has a good bank relationship. They can get some of the funding from their bank, but not all of it. And they need that additional stretch partner. And that's where they come to us. Of course, there are instances where the bank won't do much of the funding, or it might have been a no from the bank. We do see those as well. As long as there's a viable business there, we're open to a conversation. The next example is an interesting one. This is actually sort of fashion wholesale. So I know it's not quite directly in that world, certainly not in the world of advanced manufacturing, but an example here, this wholesaler had substantial orders from Taiwan, other countries in Southeast Asia, and was also exporting into North America. So what we find is that with some of these buyers, again, it depends by product, but some of these buyers, once their manufacturers sold their initial product and been through a prove-up stage, example, maybe the prove-up order is 100,000. Then it goes into multi-stores, multi-locations in the buying country, states or Southeast Asia, and the next order is 500,000. Now, I know that it's not, it doesn't happen every day, but these are the examples where the business has proved up its product then the next order is very large and the bank may not be able to support. So in this sort of situation, there's times we can do the full amount, there's times we can't, or we might be able to do a portion and the bank can do a portion. So worthwhile thinking about us. The last example Emily's going to cover, and it's back in that realm of export market development. And we just wanted to touch on this one again because businesses that are not currently exporting, if there's a desire to export and you're developing an offshore market, that's where we can support as well. So again, apologies, our example here isn't directly for advanced manufacturing, but just work with us in principle, and Emily will take us through.
Sure. Yeah, so this customer came to us. They were developing their own beauty products, basically, and they were selling them online, domestically, and looking to generate that international market as well. They also had a really unique thing where they were developing a lead generation software online designed for beauty spas, and they were selling this as well. So they came to us with a really big plan to start developing their export markets overseas. So they had a few lists of costs and things that they needed to help out with. So we were actually able to come in and provide them a small business export loan to help with the costs of their marketing, their product fulfillment and staff training, and basically everything the business needed to start taking that next step to move their business overseas and really get integrated in the international market. And yeah, without our assistance, they probably wouldn't have been able to take that next step quite yet. Yeah, that's about it. Thanks.
Yeah, and I think it's a good one because there's a lot of soft cost in there as well with export market development. You know, you might have to be traveling, be at trade shows, might need samples, you might need to hold sample stock overseas as well. So that's one where this loan can be quite helpful. Has anyone who used the export market development grant? So this is the Austrade grant. Could I get a show of hands of people that have used that or are familiar with that? A few? Yeah, definitely. Yeah, and look, the grant's been great. And look, one way you can think about the export market development loan is an off-ramp for the grant. So you've had the grant, you need a bit more funding. Of course, this is paid back, it is a loan, but one to think about and can be used for a variety of reasons, sectors or industries. So where to from here? Look, to apply with us and seek finance, very easy. Our main website, exportfinance.gov.au, small business, very easy to find. We'll share this link in the chat as well. And submission, look, the application takes around 20 minutes to submit, fairly straightforward. We'll then reach out to you within half a business day to talk through the app and work with you on the supporting documents. We need all the normal things like financials, bank statements, that sort of thing. But from there, it's generally we certainly have a relatively straightforward process. Generally, as long as you can get us the information quickly, we can get the funding, get an answer on the funding quickly. So that brings us to the end of the presentation. I'll leave a screen up with their contact details. Again, if you don't apply directly with us, or you've got a larger amount, you're saying, hang on, I'm a big business, not a small business, just give us a call. We're very happy to have a chat. But with that, Amelia, back to you.
Yep. Thank you so much for that presentation. There's been a few questions that have come through, so I'll just direct them to you if you could answer them. So one from John. Is the 2-year trading history mentioned by Emily a standard requirement across the board for Export Finance Australia?
Take that one, Emily.
Yeah, sure. So yeah, that is a pretty standard requirement for us and for most banks that you would go to see. Basically, we do need that 2 years of historical trading history just to show where you've been as a business, your growth, and where you're headed as well in the future.
Yeah.
Chris, anything to add?
Yeah, look, I probably would say, if you're at 18 months and you're closing in on that 2 years, we'd be open to a discussion then. Also, if you have, what we do see sometimes is that a second entity can be set up. There might be ABC Manufacturing, and then they've set up XYZ Manufacturing, and it's XYZ Manufacturing. That second entity has been trading for a shorter period of time. If there's two entities involved and you combined entities, there's 2 years there, that is something that we can consider. Or if you were a sole trader and now you've incorporated and become a company, then again we can consider that one as well as part of getting you to 2 years trading history.
Cool. One from Jai for the small business loan, does the business need to be profitable? Is the criteria similar to banks or small lenders? If the export income is currently around 5 to 10%, are they still able to get the funding?
So I'll take the second part of that one first. Yes, if it's 5 to 10% export income, that's certainly something that we'd consider. The way we would do that is we would, if you've got a purchase order or if you're developing your export market, those would be things that we could look at. So it certainly doesn't have to be 20% or half your income is from exporting. We're open to the discussion. In terms of does the business need to be profitable? Look, we do need the business to be profitable, at least through break even. If you're still in, for example, an R&D phase or early on the journey and there's a lot of directors' money going in to support the business at this stage, that would be too early for us. Generally, once you're through break even and you've kind of proven that there's a little bit of profit there, that's where we're open to a discussion. So, and that to that extent, we are similar to a bank. We do need to lend on commercial terms.
Yeah. We've got a few more. So one from Michael. For companies with validated technologies addressing regulated sectors such as health, law, workplace safety, and aviation, what export finance mechanisms or market development programs are most effective in supporting international scale, particularly when upfront liquidity is constrained?
Yeah, good question. So if I read that correctly, there's a software and an element there, and we do know with those sort of businesses, it can take a long time to develop contracts and get paid. So in this sort of example, where we'd probably be open to the discussion is around our export market development loan. If you've got domestic cash flows and that's what's driving the business at present, but desire to go overseas, an example there would be, say you've got a multinational company and you're providing software for their Australian operation. How do you get into their Southeast Asian operation, for example? Export market development loan absolutely would be worth a discussion.
Cool. And that's also available on your website if they wanted to read about that up further?
Yes, correct. Under the small business section. Yeah, exportfinance.gov.au.
Cool. We have one from Brody. In the case of the small business export loan being used for export market development, what loan size is available?
We can go up to 350,000 on that loan. If you're an exporter that needs a larger amount, a couple of ways we can tackle it. One is that we do a short-term fund on the export market development loan, and then we look to connect you in with our commercial team who can do a larger amount in future.
Nice. And we had one through the chat. Can you seek and receive finance more than once through Export Finance Australia?
Yes, absolutely. Absolutely, you can. Our general guideline is that if you were to say 1st of September, you took a loan with us, we'd want to see around 6 months repayment history before we did a second facility. But as a manufacturer, you can come back to us as often as you like from there on. There's no limit there's no hard rule that says, you can only get 3 loans or 4 loans or 5 loans. So the export market development grant, by comparison, there's obviously some limitations there from Austrade, we're our sister agency. But on the finance side, I mean, we've got customers that have been with Export Finance for 8 or 10 years, and there's been 10 or 20 facilities for that customer.
Yeah, wow.
So it's certainly something, yeah. And you can use it tactically, right? So we're not, part of being government, we're not here to take away the main bank relationship. So, you keep your bank relationship, they do all your property or some of your equipment lending, whatever it might be, and then you use us tactically when you need that bit of stretch or the bank doesn't have the appetite or whatnot. But again, I just would also emphasise we're not a lender of last resort. So if the business has got to be, it's got to be viable through that break even and showing some profit.
Yeah, that's so good to know that they can come back multiple times and keep accessing this service. We've just got another one through from Vince. For a business moving from an extensive R&D phase to an actual sale of $14 million machine to a client that doesn't do progress payments means an unsecured business propped up by shareholders with a cash flow problem. Can Export Finance Australia help?
Look, it might be a bit early for us with that. We do see a lot of businesses emerging from R&D phase, and it can be quite a tricky time for the business because the R&D support that's available from government. Vince, I'll be happy to have a chat with you offline. My hunch is that it might be a bit early for us, and there's probably a little bit more shareholder capital needed on that one.
Yeah, cool. I'll take down Vince's question and send that through to you, Chris, so you can reply back to him later. Just let me see if there's anything else in the Q&A. If you do have any questions, feel free to put them into the chat. I think we've covered all the ones here. Let me just check the other box as well.
Emily, there's a few common questions we get. Is there one or two of those we can
just
share in advance?
We get a few general questions regularly. So one of those is basically, are there any industries that you don't consider?
Good point. So with industries, the oil and gas would be a no for us. So there's a change in that sort of appetite these days. So if you are directly involved in fossil fuel, that would be a no. Conversely, if it's mining, supply chain, not fossil fuel related, then that would be, or energy sector that's not fossil fuel related, then that would be a yes. We could support.
Cool. Thanks for that. And what about if someone has a really good relationship with their bank? Why would they come to us?
For the component, look, there's a couple of ways to think about it. One is that the bank might have limitations on what they can do. Sometimes that the business just wants to diversify its lending relationships, doesn't want to put up more security for the bank, or we are a funder that will be more comfortable with the export destination, or if there's a bit of stretch in the lending.
Thank you. And I guess one of the other really common ones we do get is, how long does the process actually take?
Yeah, very good. So if all the documentation is ready, and by that I mean it's things like your financials, if you've got your bank statements there, if there's a trust involved, is the trust deed there ready to go? Look, we can get the finance to you within around 21 days. What does delay us is if the accountant is waiting, the accountant hasn't prepared the financials, you're then waiting on the financials. The accountant takes 4 weeks, then if he sends part of it but not all of it, those are the things that really delay the loan process.
I think we have one more in the chat.
We just have one from Robin. Are you able to help with funding of an asset that we don't sell?
Yeah. Go on.
It's doing a hardware-enabled service to Europe.
Yes. So let me just help connect the dots there. So probably a couple of ways. If I'm just understanding the question correctly, either one, the asset is offshore, or two, you're acquiring an asset to go into your production cycle. Could you just bang me a couple more points there, Robin, just so I understand in the chat?
Just give Robin a few minutes to come back to us.
I think, yeah. I mean, separately, if I look at those two threads, one is can we fund assets offshore? Yes, there is room in our mandate to do that. It'd be worth a discussion on the requirements there. Two is if you're a manufacturer and you need to buy an asset, a bit of equipment. I'll give you an example. Like if you need CAD CAM equipment and it's coming from Europe, or a Trump metal press machine or a laser cutter, and you need to import that equipment to go into your manufacturing process in order to produce a good that is then exported, we can actually support that equipment finance. And we see it in certainly circumstances where equipment has had to come in from the States, manufacturer has had to pay 40% of the cost, and none of the lenders here will support that until it's on the dock in Australia. So the period that you're bringing that equipment in, that's something we could talk about. The critical thing is, does that equipment then go into the production chain to make a good that is exported? That's the link for us.
Yeah. So Robin has said the asset is to be built in Australia and shipped to Europe, and then we charge a per use fee.
Okay, so the asset will be operating offshore. I'm with you. Okay, so Robin, yeah, look, worth a discussion with us. So Emily or myself, by all means, send us an email or give us a call, and let's explore that one further and understand a bit more about the circumstances.
Perfect. Okay, we have another one from Thomas. Businesses just under 250,000 revenue exports. Is there an option for an unsecured facility for uses like working capital, stock IP, with strong export growth over 3 years?
Yeah, again, if you're not quite at the 250, but there is a pathway to get there, then we'd be open to that. I'd probably say if the business is early in startup and not profitable, then it would be a bit early. But if you've got through that break even, you're heading towards the 250,000 number, you think you'll be there over the next 12 months. Just for example purposes, you're turning over 200,000, you think you'll get to that next threshold over the next 12 months. That would be a good time to at least start a discussion. But if you're sort of earlier than that, then it's probably a bit early for us.
Cool, that's really good to know. I'll just see if there's any more questions. If not, we might give everyone 10 minutes back in their day, unless there's anything else, Chris and Emily, you want to cover off.
It's all from our side. Just really thank you to the team at AMGC for facilitating today. And be very happy to speak to any manufacturers on the call.
Perfect. Well, thank you so much, everyone, for joining today and listening to this amazing webinar. I'd like to thank the team from Export Finance Australia. They've provided some really valuable insights. We'll be sending a survey post-webinar as well. So if you do want to connect any further, you can leave your email in there and I can pass that over to Chris and Emily. But yeah, thanks again, Export Finance Australia, for being with us today.
Thank you.
Speak to you all soon.
Thanks everyone.
Everyone.